Hello, good morning, ladies and gentlemen. How are you doing today? And welcome to another new week. And I hope you had a wonderful weekend, everyone. Well, for me, it has been a very short weekend, as it was a beautiful time for me. In fact, it was short, and I hope you also had a wonderful weekend too as well. So let's quickly confirm that we're on the same page here. So if you can see my screen and you can hear my voice clearly, kindly type in hi in the comment section so that we can get this live session started. So let's confirm that we are good to go this morning. I would like to see some feedback in the comment section, and I will be running through the comment section to read through the feedbacks I have before we kickstart the session. Okay, so let's see, what do we have here? Okay, Laukata, good morning to you. Conjuri, hello, good morning. 582 is new here. You're welcome on board, and I hope you stay tuned in through the course of the session so that you can get to understand how it works here. Then I can also see 587, good morning. Risha Kisa, good morning to you. 587, good morning as well. Okay, Mike Miyagi, good morning, glad to have you around. 364, Tsuman. Please kindly note this comment from Carlos Praga is a spam, and it's likely going to be a fraudulent link. Please note this. I don't want anyone to fall for such malicious and dubious links. Please bear in mind that. Okay, Smushy, good morning to you, glad to have you around. Thank you. 234 Jasoni 234, thank you. Menioborg, good morning. Stone, good morning to you. All right, so I think this is good for me. I will take this as a positive feedback that we are all on the same page here. So I'm excited to welcome you to yet another promising session on the Extreme Speed. My name is Sheriff Daramola, and as usual, I will be your anchor for the next 1 hour, where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. Well, considering the fact that today is the first trading day of the week, it is our custom here in this community to choose random pairs, which we shall be reviewing and doing follow-ups on throughout the course of the week. So if you have any pairs, commodity, cryptocurrency, options, whatever it is, this is the most appropriate time for you to drop it in the comment section so that we can incorporate it into our plans for this week. And whatever we start monitoring today will definitely be the platform upon which we shall be monitoring and reviewing here in the community. So with that being said, once again, you're welcome, and let's dive into the chart right now to see what is going on in the market at this point. But before we go into the chart and to identify trading opportunities, I would like us to look at the economic calendar for this week so that we can have a purview of what our expectations are, and looking forward to macroeconomic events that will be bringing some liquidity into this market. And based on the pairs that I have chosen for us to monitor for today, I'm going to be looking at currency macroeconomic event that will be affecting the dollar, the Japanese yen, and then I think the pounds too as well. So here we are on the macroeconomic calendar, and on Tuesday we have our first macroeconomic event, which is the Fed's chairman's speech, which is coming up later on that day. And then on Thursday we don't have any events regarding the pairs we are monitoring. And on Friday we have a couple of events. We have the GDP, that is for the pounds, and from the look of things there is some level of positivity in the air for the pounds here. Look at what we have. The previous data here states that we have a minus 0.3% and we have a consensus of 0% at this point. So we shall be looking forward to see how what is going to be happening this week. Are we going to be having something just as expected, below expectation, or probably beyond expectation? Then also we have the Michigan publication, that is for the consumer sentiment index, coming up on that same Friday. And we already have the previous data, which falls at the 64.9, though we don't have a consensus yet. So I hope this will be updated during the course of the week. So we shall definitely be anticipating this event. And one thing for sure is that we shall be seeing the reflection of this anticipation on the chart as price action. So with this being said here, let's go right into the chart and let's look at things from a technical standpoint. So the first thing we are going to be treating this morning as usual is going to be the US oil. And on the US oil, let's run through the daily time frame. Let's see what is really going on in this market from a holistic point of view, after which we shall be scaling down to the lower time frame to identify trading opportunities. So the first thing we observe here on the daily time frame is the fact that price has been bearish at least since the month of June, and as a result of that we have this bearish trend line after connecting the series of lower highs. So we have a beautiful trend line here which has been guiding bearish momentum for the last 6 to 7 months. And then if we zoom into the current structure here, at least in the last couple of months now, we have a major key level at the $80 level. Remember, this is one of the key levels we said we shall be using to guide trading activity for this year. And following the bearish impulse leg here that started in the month of November, remember at the beginning of the year we identified something that looks more like a reversal pattern here in the form of a double bottom structure. And you know, from a technical standpoint, for a reversal pattern like this to be mature, we want to see price action break out of a neckline. So in that regard, we were able to identify this neckline area, which coincidentally shares a beautiful confluence with the key level that we identified around this area that has definitely been a strong selling niche in the last 3 to 4 months, as you can see here. So a couple of weeks ago, we identified the breakout of both this trend line and the $80 level with the hopes that price will continue to the upside, as a breakout of this neckline hereby confirmed that that reversal pattern is mature. But things did not go as expected, as we saw that as soon as price got into the $82.50 level, we started seeing selling pressure, rejecting and negating all bullish potential around this area. So sellers continue to negate all bullish momentum here, and which lasted about 2 weeks on this one. And as a result of this, price action was initially caught within a channel here between the $82.50 level and the $78 area to further emphasize the indecision in that market. And whenever we have an indecision like this in the market structure, what we definitely know is that there is an indecision. That is the first thing, and there is a likelihood that participants in this market are looking forward to a catalyst which might likely come in form of a macroeconomic event that will be bringing some liquidity into the market to push price action to where it wants to be going. And in fact, we anticipated the OPEC Plus meeting last week. It came in on the 2nd of February last week, as we saw that the decision of cutting oil production by 2 million barrel per day was still held on, as there was no further decision on that. So it still remains 2 million barrels per day in terms of the cutting of oil production, and they kept that on. And with the hopes that the COVID policy in China has been lifted, we were expecting that we might be seeing a huge demand in price for the oil commodity. However, things did not work out as expected, as we saw a final breakdown of the $78 level here during the course of last week's trading session. Retest of structure to further confirm that sellers are still very strong in this market. And with a breakout of the bearish trend line here, we were thinking that probably price might come back to do a retest of that structure to incite another wave of bullish momentum. But what we saw here on Friday was a huge engulfing candle, taking price out of that structure, breaking that previous demand zone at the $75 level. Remember, we had a strong demand zone here, breaking down that structure to bring price back into a technical structure here at the $73.50 level. And at this point in time, price is currently trading around the structure, and you would agree that we are at a critical point in the market right now, as price action is trading at a level which has a strong memory for buying powers. So going into the New York session today, in fact going into the new week, what is going to be our plans for the US oil? Considering the fact that price is at a critical point here, it is important that we admit that price could go either way at this point. If we consider the bullish the demand zone here, there is a likelihood that we could see some buy pressure around this area on our lower time frame to incite another wave of bullish momentum. That is one scenario we want to be looking forward to this week. Then another possible thing that could happen here is if price breaks down the $73.50 level, followed by selling pressure below the structure, we are likely to see price drop further to the downside. And remember, we have a structure here at the $70 level, which has been the lowest point price has ever been in the last 1 year. We also going to be looking forward to see how price action will react to that level if we do have a breakdown of the $73.50 level. So these are my views here on the US oil from an holistic point of view. So the next thing we want to be doing right now is to scale down to a much lower time frame so that we can see how participants in this market has been reacting to the $73.50 level since the beginning of this week. So in that regard, we shall be scaling down to a much lower time frame. And I'm going to go down to the 1 hour time frame right now, and so that we can see how participants in this market has been reacting to that current structure. I think I would need to show you something on the 4 hours time frame so that we can be able to be on the same page here, though I shared this last week, and for the sake of those who are not part of our live session last week, remember at the 4 hours time frame we identified a flat channel where we saw our price action has been caught within the $82.50 level, which has been a strong selling niche since the month of November last year. As you can see, every attempt by the buyers to break out of that structure has been met with strong resistance from the sellers. Then we also have a demand zone, which is the support level of the channel, sitting around the $73.50 level, which we identified on the daily time frame a couple of minutes ago, giving us a huge indecision phase at this point. So every time price comes into the $82.50 level, we have been seeing selling pressure, and anytime price comes into the $73.50 level, we have been seeing buy pressure coming in from that structure. This more or less gives us a further clue into the strength of the buyers within this area. So there is a likelihood that we might be seeing some buy pressure around this area on our lower time frame to incite another wave of bullish momentum. However, if price breaks down that structure, then we might be considering selling the US oil. So going back down to the 1 hour time frame now, let's see what we have here and what has been happening around the structure since the beginning of this week. So since the beginning of this week, this is what I was able to identify here. as price action was caught within a channel, and that is between the $73.90 level, which has been the resistance point in the last 10 to 12 hours now. And then we have the support level of this channel sitting around the $73.50 level. And remember, from a technical standpoint, whenever we have a beautiful channel like this, all we want to be doing is to remain patient, to wait out for a signal in the form of either a breakout of that channel to the upside to give us an opportunity to buy, or a breakdown of this channel to give us an opportunity to sell. And if we look at what has been happening here since the beginning of the week, you would notice that price action is tending towards the resistance point of this channel, giving us that impression that buyers continue to knock through the ceiling of that resistance level. And if this knocking continues, if this persistence continues, at one point in time there is going to be a breakthrough of that level. And what we have seen here in the last 3 to 4 hours now, we saw the first breakout of that structure here, breaking out that level with an engulfing candle, though price action broke down again to the downside. But one thing about the last candle here is that it closed in the form of a hammer candle, which from a technical standpoint is a bullish, it's a bullish gives us a sign of a bullish momentum that buyers are still present in this current structure. So in that regard, I have a buy stop order right above the $73.90 level, with the hopes that buyers will continue to push price to the upside. And it appears I have a position triggered at this point, and if you are not yet in this trade, I think it is most appropriate to join around this level. So that is one thing we are going to be looking forward to now. As the buy position is triggered, our stop loss remains somewhere right below the $73.35 level. And if this buy pressure continues to the upside, I want us to consider this as a counter trend opportunity, at least in the meantime. If we take into consideration the bearish momentum here in the last couple of weeks, this is likely going to be a counter trend opportunity. So we should be having our take profit target somewhere within the $77 level and the $78 area, where I think price might likely come back into this area to incite another wave of bearish momentum. And if it so happens that price action breaks out of that level, then we might be looking out for buying opportunity on our lower time frame to join a trend continuation to the upside. So that is the view I have here on the US oil. Since we have a buy position triggered, let's see how far this is going to go. Another thing I would like to consider here, I want us to put in mind, is that despite the fact that we already have a buy position running at this point, we should not ignore the possibility that sellers might likely come in at this point. And in that regard, we shall be looking at somewhere below the $73.35 level, which is serving as the support level for this week. So if it so happens that price action breaks down that $73.35 level in the future, taking us out of our current buy position, then we might be looking out for selling opportunities right below the structure to join a decline to the downside. So let's keep this in mind as we continue to guide this current buy position to the upside. If you have any questions regarding what I just explained so far, feel free to drop your inquiries in the comment section, and I will be willing to be of help in that regard. So I will be taking the next 10 to 15 seconds to read through the charts and see if there are any questions for me before I move on to the next pair. All right, so what do we have here? Okay. Hey Steamroll, I see you. Good morning to you. Glad to have you around. Okay, Cypher, good morning. Okay, 108, good morning to you. 428, good morning. Benzati, good morning. All right. Okay. 346, thank you for that compliment. Good morning to you as well. So in the absence of no questions, I will assume that we are on the same page here. So in that regard, I will be moving on to the next option. So the next option we shall be looking at this morning is going to be the US tech as usual. And on the US tech, already I have a sell position triggered on the US oil, and I think this idea still comes from our expectations on Friday. So for those who are not part of the session on Friday, let's quickly run through the daily time frame and have an holistic view of what is going on in this market, after which we shall come back into the lower time frame to make a decision. So here we are on the daily time frame, and the first thing we observed on the daily time frame is that price action has been very bearish. And in fact, throughout the course of last year's trading session, price action had continued to find lower heights and lower lows. As a result of this, we were able to connect the series of lower highs here, which has given us that resultant bearish trend line, which has been guiding selling pressure since the beginning of the year. However, something happened in the month of June, as we can see here that every attempt by the sellers to break down the $11,000 level has been met with strong resistance from the buyers. So as you can see, every attempt here to break down structure, we saw our buyers came in to negate all the selling pressure at every single point in time price gets into that level. And this has led to a final breakout of that bearish trend line, hereby giving us a signal that the trend line here has no capacity to continue to hold that bearish momentum. And what we saw in the last week was the fact that price has come into the 12,900, which is also a very important key level considering this current structure. In fact, if we go to as far back as the month of March of last year, you would notice how the $12,900 level has been a major determinant of price action. Look at what happened here in the month of March. We saw how that level was holding buy pressure. We also saw some buy pressure around this area in the month of April, though it wasn't that strong, and that led to a final breakdown of that structure in the month of May. We saw selling pressure here. We saw a little breakout of that structure in the month of August. Price action broke down that level again during the later part of the month of August, and since then price has been trading below the 12,900 to further emphasize the strength of the sellers at this point. And during the course of last week's trading session, we saw sharp rejection of the 12,900, further emphasizing that sellers are still very strong around the structure. And if we zoom in, taking into consideration the bullish momentum that started this year at the $11,000 level, you would agree that a retracement phase at this juncture is long overdue. And you know, from a technical standpoint, whenever investors or traders take advantage of an opportunity at one point in time, there will be some trading activities, some profit-taking activities, which will be reflected on the chart as a retracement of that previous impulse leg here. And it appears we begin to see something like that following the selling pressure here. We saw the last 2 days of last week's trading session close in the form of a shooting star candle, a technical price action candle giving us a signal that sellers are very strong at this point. So we might likely see a situation where this retracement will go to as far as the 12,100, or probably the 11,700, or the bearish trend line that was broken a couple of weeks ago to incite another wave of bullish momentum. So what we are going to be looking forward to today is to see how far this retracement phase is going to go. Is it going to get to as far as the 12,100, a level which was broken during the course of last week's trading session to signal a bullish momentum? So we might see price come into the structure, and if it comes into the structure, we want to see how price action will be reacting to that level to decide if we are going to be adding more position to our existing trade, or we might be getting ready to join another wave of bullish momentum. So what we shall be doing right now is to scale back down into the lower time frame. Let's see how price action is reacting with the $12,500 level, a very strong psychological level, to decide what our next line of action will be. So if we take a little time to scale down to a much lower time frame here, this is what I was able to identify. I shared this during our live session on Friday after identifying multiple rejection of the 12,900. So we can see that we saw multiple selling pressure below the 12,900 last week, following that impulsive move that we took advantage of. And as soon as price got into the 12,900, we saw this first rejection here. Price drop into the 12,550 level. We saw price climb up from that level again, but one thing here was that price was unable to break the previous high, hereby giving us a new low. We'll call it a lower high at this point to further emphasize that there is some level of selling pressure here. And if you look at the structure critically well, you would notice that what we have here appear to be transitioning into a reversal pattern in the form of a double top structure. And from a technical standpoint, whenever we have such a pattern like this, the next thing we want to be doing is to identify a neckline, which we shall be using to guide trading activity. And if we take into consideration this current structure here, you would notice that between the 12,500 level and the 12,550 level appears to be a beautiful neckline, which we shall be using to guide trading activity for this week. And for us to take advantage of this reversal pattern, we want to see a breakdown of the neckline area, giving us a signal, probably followed with some selling pressure below the structure to give us an opportunity to join that decline to the downside. So this is the philosophy behind the selling expectation we are having here on the US tech. So permit me to scale back down to the lower time frame. Let's see how price action has been reacting to the current structure here since the beginning of the week to decide what our next line of action will be. So since the beginning of the week here, this is what we have observed on the 1 hour time frame. We saw our price has been caught within a channel between the $12,050 level, which at this point will be considered as the resistance level for this week. Then we have the support level for the channel falling around the $12,500 level, a very strong psychological level for that matter. And what we have seen here is a breakdown of that structure to signal a bearish momentum. I told you I triggered my position right below the structure, and if you are taking advantage of that move right below that level, well done to you for being on standby to catch that move. And for those who had missed out on this opportunity, well, let's see if the market will be presenting us with another opportunity to add more position. So how do we intend to use this current structure to look out for more opportunities to either add more position or join this decline if you are not yet in this trade? Well, what I will be advising us to do at this point, if you are not in this trade, is to remain patient and let's wait out for probably a retest of structure, that is a retest of the 12,500 followed by selling pressure below the structure. Then we could actually join that decline to the downside. So that is one scenario we shall be looking forward to at this point. Another thing I would like us to take into consideration here is this lower highs that has been happening since the beginning of the week, and if we connect the series of lower highs here, we should be having something like this. And if we bring back our candle charts, do some readjustments so that this line could touch all the lower highs here, we should definitely be having a bearish trend line like this. So going into the New York session today, we have the trend line here guiding our trading activity, and at the same time we have the 12,500. So what we want to be looking forward to here is to see price come back to either do a retest of this trend line or the $12,500 level to give us an opportunity to add more position to our existing trade or join if you are not yet in this trade. So this is what we shall be looking forward to for selling opportunities on the US tech. Now remember, we have a bullish trend line. Let me scale up to the 4 hours time frame so that I can show you how important that bullish trend line is and how we intend to use it to guide this current sell position that we are in right now. So if you look at what happened here since the first week of this year, that is the first week of January this year, we saw that we've been witnessing a bullish momentum, and if we connect the series of higher lows here, we do have this bullish trend line. So we have a major bullish trend line here. Let me bolden this a little bit so that we can see it more clearly. So we have a bullish trend line here. That's the major bullish trend line for this year. And then during the third week of the month of January, we saw a deviation from that bullish trend line as we saw new higher lows in that regard. So that is the temporary bullish trend line. Here, that's a deviation of that major bullish trend line. So why is this very important, taking into consideration the current sell position? So at this point in time, we have this trend line here. So there is a likelihood that price might come into this trend line to incite another wave of bullish momentum. So we need to be very, very careful of how price action reacts to that level. So if price action gets into the bullish trend line, which will fall somewhere right around the $12,350 level, somewhere around there, then we want to be moving our stop loss to lock in some profit while we wait out and see how price action will be reacting to this level to decide what our next line of action will be. So if price gets into that structure, that is the 12,350 level, which also shares a beautiful confluence with that bullish trend line, and we start seeing some buy pressure around this area, it will be a very good opportunity to join a counter trend, which might come back into the 12,550 level to retest it to incite another wave, we never can tell, or break out of that level to incite another move to the upside. And if price does a further breakdown of that trend line, then this will welcome an opportunity to add more position to our existing trade. So let's keep this in mind. I would want to label this area for the sake of clarity. So we have it labeled at 12,350 level. So as soon as price gets into the level, as we continue to guide this bearish momentum, as soon as it gets into that level, we move our stop loss accordingly to lock in some profit while we wait out and see how price action reacts to that structure to decide if we are going to be adding more position to our existing trade, or we shall be getting ready to join a bullish trend continuation to the upside. So I hope I made myself very clear. If you have any questions, feel free to drop your inquiries in the comment section, and I am willing to be of help in that regard. And for the sake of easiness, you might want to screenshot my screen, munch my screen, so that you can use it as a reference point when you are about to make your individual decision. All right, so I will be taking the next 10 to 15 seconds to read through the chats and see if there are any questions before we move on to the next pair. So what do we have here? I can see Saleh 6123659. Good morning to you. Okay, it's afternoon over there. All right. Oh, thank you for that compliment. I'm grateful. All right, so we also have Pires. Hello everyone. Hello to you too. How are you doing? Then we have Battle Guide. Good morning to you as well. Then Absis is making a compliment here. Thank you for that compliment. We are grateful. All right, so in the absence, okay, Absis, hi, how are you doing? Okay, so in the absence of no questions, I want to assume that we are on the same page here. So let's move on to the next pair. And the next pair we shall be looking at this morning is the let's see, the GBPUSD. So on the GBPUSD, you know, we were on a very profitable trade last week on the GBPUSD following the NFP. Remember, we had this bullish trend line identified, and we were part of this breakdown of that bullish trend line here right around the 1.22500 level to give us a signal of a strong bearish momentum. And congrats to those who have been part of this trade, but for the sake of this session, let's quickly run through the ideas that brought us to this point in this market. So the first thing we did was to look at the structure we have on the daily time frame, and on the daily time frame we have a couple of key levels which we said we shall be using to guide our trading activity. Now the first key level we identified on the daily time frame is the 1.24500 level, which has been a major determinant of price action in the last 7 to 8 months. Look at how this level has been a strong buying niche at one point before we saw the breakdown of that structure here. We saw buying pressure before this level was finally broken in the month of June of last year. And since the breakdown of that structure in the month of June last year, price action had continued to trade below this level to further emphasize the strength of the sellers at this point in the market. And if we look at what happened here in the last couple of weeks, we saw though we had a bullish momentum since the beginning of the year, where price action continued to find higher highs after breaking out of the 1.200 level, respecting that bullish trend line at the same time. But one thing that happened here was that when price got into the 1.24500 level, we saw selling pressure around that area, which lasted about 2 weeks on this one to further emphasize how strong the sellers are at that particular point in time. And we actually anticipated that sellers might likely come in, and we were lucky enough to be part of the sell move that broke down the 1.22500 level, breaking down that bullish trend line to inside that bearish move last week. And in addition to the 1.24500 level is this bullish trend line, which has been holding bullish momentum here since the month of September of last year. So you can see if we connect the series of higher lows here, we have that bullish trend line figured out. And now that we have a breakdown of that bullish trend line sharing a confluence with the 1.22500 level, what is going to be our plans for this week? Well, if you look at this structure closely, let me zoom in so that we can see things more clearly here. You can see that price action is approaching another key level at the 1.200 level. If we go to as far back as the month of November, you will see how that level has been a strong buying niche in this market since the breakout happened in the month of November. We saw what happened here in the month of December. We saw buy pressure, and even at the beginning of this year, we saw buy pressure resume around the 1.200 area. So you would agree with me that at this point we are at a critical point, as we need to see how price action will be reacting to the 1.200 level to decide what our next line of action will be. And if we take this structure into consideration, there are two things, I think 3 good things that could happen from this current structure. We could see a situation whereby pressure resumes above the 1.200 level on our lower time frame to incite probably price coming back to do a retest of structure. Remember, we had the breakdown of both the 1.22500 and this bullish trend line during the course of last week's trading session. And from a technical standpoint, whenever we have a breakdown of a structure, there is a likelihood that price will come back to do a retest of that structure to incite another wave of bearish momentum. So we shall be taking this into consideration as well while we plan our trade for today. And another thing that could happen here is price action could evolve into a trend continuation pattern around the 1.200 level. It could be a bearish rectangular pattern, breakdown retest of structure on our lower time frame, then incite another wave of bearish momentum. So these are the things we shall be looking forward to on our lower time frame. So the next thing we are going to be doing right now is to scale down to the lower time frame. Let's see how price action has been reacting to this current structure since the beginning of the week. Then we can use whatever structure we can identify on the lower time frame to decide what our next line of action will be. So I will be scaling down to a much lower time frame right now, and let me see if I could share something on the 4 hours time frame. Okay, let's go right into the 1 hour time frame, where we were able to identify a structure after monitoring the character of price action since the beginning of this new week. So since the beginning of the week, this is what we were able to identify on the 1 hour time frame. We have a beautiful flat channel where we have a resistance point at the 1.20650 level. So as you can see, every attempt by the buyers to break out of the structure has been met with strong resistance from the sellers. And then we also have the support level of the channel sitting at the 1.20300 level to give us a buying niche around that particular area. So we have a beautiful flat channel at this point, and if we take into consideration the impulsive bearish leg that we had last week, this channel could transition into a trend continuation pattern in the form of a bearish rectangular pattern, where a breakdown of the 1.20300 level will incite a bearish momentum at this point. And if a further breakdown of the 1.200 level happens, we want to be thinking of adding more position to our existing trade on the GBPUSD. So the current structure supporting the sell momentum here has a tendency of giving us multiple entries if we are conscious enough to be on standby to catch these opportunities. In as much as this current structure is looking more bearish at this point, we should not ignore the possibilities that buyer could actually come in. So because of this, I already have a buy stop order just in case I get stopped out from my sell position right above the 1.20650, where if a breakout retest of the structure happens, we want to be thinking of buying the GBPUSD. And at this point, that breakout of the 1.20650 level will be considered as a counter trend opportunity, which might evolve into a retracement of that previous impulse leg that we have here, retracement into probably our golden zone area. It could be the 50%, 61.8%, or the 78.6% of the previous impulse leg to incite another wave of bearish momentum. And if you look at the structure very well, you will see that we have a trend line around that area just in case price action breaks out of the 1.20650. We have a trend line here which could guide any selling momentum if it so happens that price action comes back into that structure. So we want to take this into consideration as well as we plan against the New York session today. So like I said here, I already have my sell position triggered below the 1.20300, and I hope that price will continue to go to the downside from this area. So remember that we also have an opportunity to add more position if price action goes ahead to break down the 1.200 level. So let's keep all these ideas in mind as we continue to monitor price action. And as usual, you can screenshot my screen so that you can use it as a reference point when you are about to make your individual decision. So if you have any questions regarding what I just explained so far, feel free to drop your inquiries in the comment section. So I will be taking the next 10 to 15 seconds to read through the chat and see if there are any questions before I move on to the next pair. So reading through the comment section here, what do we have? Okay. All right, so good morning. I can see Jagadish. All right, good morning to you. Latif Asel, hi, how are you doing this morning? Good morning. All right, okay, so I think that's what we have here. So in the absence of no questions, I will assume that we're on the same page here, and then I will definitely be moving on to the next pair. So the next pair we shall be looking at this morning is the XAUUSD. And in fact, on the XAUUSD, it was also a very profitable trade for us on the XAUUSD last week, as we were able to be part of this bearish momentum. Even prior to the NFP, we were able to sell the XAUUSD right below the 1,950 level, and then during the NFP, we joined right around the 1,912 after identifying a structure around that area. And at the end of last week's trading session, we were able to scoop at least a minimum of over 6,000 pips in profit on the XAUUSD. And for everyone who had been part of that profitable trade last week, well done to you guys, kudos to you, as we are going to be looking at the chart from a fresh new perspective. So looking at the daily time frame here, the first thing we will observe here is that price action has been bullish in the last 3 to 4 months, and as a result of this, we had this bullish trend line after connecting the series of higher lows here. And in fact, at the beginning of the year, we saw this bullish momentum become very massive after the breakout of both the 1,820 and that key level at the 1,800 at the first day of this year. And price action had continued to find higher highs, breaking out structures like the 1,860, structures like the 1,900, after which it was caught within a beautiful flat channel for the last couple of weeks. And you know, during the course of last week's trading session, we saw the situation here where we said if a breakout of the 1,950 level happened, that's the resistant point of the channel, we shall be looking out for buying opportunity. And we also said that if selling pressure continues below the 1,950, we shall be looking out for selling opportunities on our lower time frame. And lucky enough, we were out of that position as price action dropped, break down the 1,900 level as it gets and retested the 1,860. And look at the structure here. Look at the 1,860. It shares a beautiful confluence with that bullish trend line that has been guiding bullish momentum since the beginning of this year. And with the current structure we have here, you would agree that we are at a critical point in this market, as anything could actually happen from this level. We could see buy pressure resume from this area, respecting that bullish trend line one more time to incite another wave of bullish momentum, or we could have a temporary bullish momentum which could be a counter trend opportunity that we can take advantage of, bringing price to retest the $1,900 level. Remember, that level was broken during the course of last week's trading session, and from a technical standpoint, whenever we have a breakdown of structure, there is a likelihood that price will come back, do a retest of the structure that was broken, evolved into selling pressure below this level on our lower time frame to incite another wave of bearish momentum. So we shall also take this into consideration while we look at the structures on our lower time frame. Then another thing that could happen here is price action could break down the 1,860 to incite another wave of bearish momentum to the downside. So these are the things we shall be looking forward to on the lower time frame. So with the information we all have here on the daily time frame, I think we are all on the same page with this current perspective. So with that being said, right now let's scale down to the lower time frame. So I will scale down to let's see if there is something I would like to show you on the 4 hours time frame. Okay, so on the 4 hours time frame, we have this $1,900 level, which has been a strong buying niche for like 2 to 3 weeks before the final breakdown of that level happened here last week. And right now the price action is right above the 1,860, and we've been noticing some buy pressure around that area. We might likely see a situation where price will come back to do a retest of the $1,900 level, a level which I said has been a strong buying niche in this market to transition into another wave of bearish momentum. So let's see what is really happening here and how participants in this market has been reacting to this current structure since the beginning of this week to decide what our next line of action will be. Now, if we scale further down into the 1 hour time frame, we begin to see things more clearly, as we can see how the week has started here, as we saw buy pressure resume right above the 1,860, where price action transitions into another channel here between the 1,880 level, which is the resistance point for this channel, and the 1,860 level, which is also our key level on the daily time frame and also serving as a support level for this current channel. So with a flat channel like this, you all know what we should be doing whenever we have such a flat channel. We understand the fact that there is an indecision in this market right now, as participants are not sure if the bearish momentum will continue to the downside, or we might likely see a form of retracement, which is a reflection of profit taking activities for those who are taking advantage of that sell momentum that began around the 1,912 level prior to the NFP of last week. So we have a flat channel here that we shall be using to guide our trading activity for today, where a breakdown of the channel will be giving us an opportunity to sell the XAUUSD, and if a breakout of the channel happens to the upside, breaking out of the 1,880, this could be an opportunity to do a counter trend where price might likely come into the 1,900 to incite another wave. And if price breaks out of the 1,900, we want to be adding more position as we continue to move our stop loss accordingly to continue to lock in some profit just in case price action moves against us at any point. So above the 1,880 level will be considered as a counter trend opportunity, and whenever we have a counter trend opportunity, we ensure that as soon as price moves significantly well in our favor, we want to be moving our stop loss accordingly to lock in some profit. Now, in addition to this flat channel, we have identified between the 1,880 level and the 1,860 is a bearish trend line, which we shall also be using to guide trading activity for today. And the trend line is here. If you see what has happened here since on Thursday of last week, we saw the selling pressure, and if we connect the series of lower highs here, we have the bearish trend line that you can see on your screen. So in addition to that flat channel, we shall be using this bearish trend line to guide our selling opportunity. As long as price remain below the trend line, we want to be comfortable in whatever sell position that we are in. In fact, we could see selling pressure resume around this area on our lower time frame to actually join from that level, and if a further breakdown of the 1,860 happens, we want to be adding more position to our existing trade. But never mind, I will be showing you something on the much lower time frame where let's see if we can identify or spot a selling opportunity early enough before the breakdown of the 1,860 happens. Then in addition to that, if price action breaks out of the trend line, the 1,880 level, I told you it's a beautiful counter trend opportunity, and if price action evolves into buying pressure right above this level, we could join the counter trend opportunity as we continue to monitor price action. So like I said earlier, we shall be scaling down to the 15 minutes time frame to see what is happening around the 1,880 level, and let's consider if the sell pressure is mature enough for us to join from that level before the breakdown of the 1,860 happens. So in that regard, I think I was able to identify a simple setup on the 15 minutes time frame, which I shared on my public platform this morning, and this is what I saw here on the 15 minutes time frame for the XAUUSD. So let's zoom in so that we can see things more clearly here. And that is what I saw. In fact, I have my sell position triggered at this point. So I saw a beautiful pennant after connecting the series of lower highs here. We have this pennant trend line, and then if we connect the series of higher lows, we have the pennant bullish trend line here. And I also had the channel between the 1,880 and the 1,875, which we saw that there is some level of consolidation phase around that area. And from a technical standpoint, a breakdown of that trend line, which also shares a beautiful confluence with the 1,875 level, is a very beautiful opportunity to join a decline from that level. So in fact, prior to the session, I had my sell limit after seeing price below the 1,870. So we have my sell position triggered at this point. So if you are in this trade, well done. It's a good opportunity to join that decline from that level. So what this simply means is that if price action continues to trade below the 1,875 level, we want to be comfortable in our sell position while we wait out and see if price will further break down the 1,860 level, where we said we are going to be adding more position to our existing trade. So you could join the sell position right now if you want to, and if you feel that you need more confirmation for the sell position to happen, then you could wait for a breakdown of the 1,860 level, which we identified earlier on the higher time frame, to join that sell opportunity to the downside. So these are the scenarios we have here on the XAUUSD for today. If you have any questions, feel free to drop your inquiries in the comment section. So I will be moving. Oh my goodness, I'm already out of time. Wow, I never knew it's 12 on the dot already. can I take this pair? Let me see if I can run through the USDJPY for today. So this is what we have on the USDJPY. Let's see if I can run through it before we close the day. So the USDJPY has been a pair I've been monitoring behind the scenes. Remember, I've not done any analysis. I didn't share anything in the last couple of weeks now on the USDJPY. And the reason why this is simply because I wanted the structure to mature before considering doing any trade on this one. Now, if we look at the daily time frame on the USDJPY, I would like to refresh our memories here, as we want to be going to as far back as September of the year 2020. Looking at the structure we have here on the daily time frame, you would observe that price has been very bullish here, and as a result of this, I was able to identify this bullish range. As you can see, price has continued to find higher highs and higher lows before this huge snap happened here in the month of March of last year. Now, things got a little bit interesting if we zoom into the current structure, that is since the month of April last year. We saw how price was initially caught within a channel between the 131.00 level and the 127.00 area to emphasize some level of indecision at that particular point in time. And this led to a breakout of the resistance point here at the 131.00 level. In fact, we saw a breakout retest of structure, which led to the huge bullish momentum that we witnessed during the second half of last year. Price has dropped back into that channel here, and this is the reason why I didn't do any analysis. I didn't publish anything on the USDJPY in the last couple of weeks. I saw this channel. I saw how price broke down the 131 level during the second week of the month of January, and we saw that selling pressure resumed below that level, and I was very doubtful that we might likely see price breaking down the support level of the 127 area to incite a bearish move. So I waited for this consolidation phase to happen, and as you can see, in the last couple of weeks, price action has been trading right within the 131 and the 127.00 level. And one thing about this consolidation phase is the fact that price has been finding higher lows to give us a clue that there is a tendency that buying momentum is gradually coming in this market. And with Friday's session closing with an engulfing candle where price closed at the 131 level at this point, this was a beautiful signal for me that we might likely be seeing a bullish momentum anytime soon. And if we take into consideration the previous impulse leg that happened here, you will see that as soon as price tested the 127.00 level, price action evolved into a reversal pattern in the form of a double bottom structure. And you know, whenever we identify such a pattern like this, the next thing we want to be doing is to identify a neckline, which we shall be using to guide trading activity. And in fact, coincidentally, the 131.00 level shares a beautiful confluence with that neckline. And for this reversal pattern to mature, we want to see an outright breakout of the 131 level, probably followed with buying pressure above the structure for a beautiful opportunity to join a rally to the upside. So in this regard, what we wanted to be doing here, what I said I will be doing here, is to monitor how price action will be reacting to the 131 level during the early hours of this week to decide what our next line of action will be. And in fact, we are beginning to see some traction since the beginning of the week. So I would like to show you the 1 hour time frame, and so you can see what I was able to identify here. So this is how the week started on the USDJPY. It started around the 131.200 level, and in fact we saw a bullish traction where we saw this engulfing candle taking price out of the 131.00 level. And there is one thing I would like to share with you on the 4 hours time frame before we go into the details. There is the fact that we have a supply zone around the 131 level here. You can see this level was at one point a demand zone initially before we saw the breakdown of the structure during the second week of the month of January. And since the breakdown of that structure, we have been witnessing selling pressure below the 131.00 level to emphasize the strength of the sellers at this point. And with a higher low here followed by this bullish engulfing candle that happened on Friday, I want to see price action take out all the sell position here to give me a good confirmation that buyers have come to stay. And in fact, what we saw during the early hours of today was quite interesting, as we saw a huge engulfing candle taking price action out of that zone to further emphasize that the sellers are likely coming in this market. Now, if we scale further down to the 1 hour time frame to see how price action has been reacting to this level since the beginning of the week, what you will notice here is that price has been caught within the channel here within the 132.350 level, as you can see, following this bullish engulfing candle. As soon as price got into the 132.350 level, we started seeing some selling pressure from that area. So we have a channel, we have the support level here at the 131.200 and the resistance point at the 132.350. So we don't want to jump into conclusions right now that we have a bullish momentum, and the reason why that is simply because even though we have seen a breakout of the supply zone, the breakout could actually turn out to be a false breakout. And if it turns out to be a false breakout, we might see a situation where selling momentum comes in, drops below the 131.00 level to further incite a sell-off in this market. So we need to be very careful here to be able to take advantage of that opportunity. And as you can see here, following the selling pressure here, we need some further confirmation to really join that bullish momentum. So what I saw during the early hours of today was multiple rejection of the 131.600 level, which lasted about 6 hours, and it was a good sign for me that we might likely be seeing a buy opportunity around this area. So I shared this on my public platform after identifying this buying pressure here. So I scaled down to my 15 minutes time frame to identify the structure to see if it's a reversal pattern there for me to be joining that bullish momentum. So I would like to show you what I saw on the 15 minutes time frame, which gave me an opportunity to join a buy position as early as this morning. So this is what I saw on the 15 minutes time frame, and I saw this temporary demand zone, as you can see here. As soon as price got into the structure, we continue to witness multiple buying pressure around that area, which gave me a sign that we might likely be having a reversal pattern around this area. And you know, whenever we have a reversal pattern, we want to identify a neckline, and that neckline falls around the 131.900 level, where we shall be looking forward to a breakout retest of that structure to give us an opportunity to buy. And in fact, I saw a breakout retest. My position was triggered right above the 131.900 level, and at this point I am currently running with about 40 pips in profit at this point. And for those who had been part of this trade, kudos to you for being on standby to catch this move, and let's see how far this move is going to go. So for those who are in this trade, I will be advising you to move your stop loss to somewhere right around your entry point. Let's secure this position as we continue to monitor price action. And to further emphasize that the structure is mature for buying opportunity is the breakout of this bearish trend line here, leading to the breakout of that neckline. So going back to our 1 hour time frame here, for those who had missed out on this opportunity, it's okay. I still think we still have more opportunity to join if price action will permit us. So what are we going to be looking forward to? If you had missed the breakout of the 131.700 level here, well, I would advise you to remain patient here, as we have another structure, which is the resistance level of this channel, sitting at the 132.350 level. So what we shall be looking forward to is to buy if price action breaks out of the 132.350 level, and if possible a retest of structure, giving us more opportunity to add more position to our existing trade. So at this point in time, we continue to hold on to a bullish bias on the USDJPY as long as price remain above the 131.600 level. Selling the USDJPY is a no-no for me at this point, unless I see a breakdown of the 131.200 with selling pressure below the structure. Remember, this area is a strong supply zone as I have identified on the 4 hours time frame. So for me to sell the USDJPY, I would want to see price break down the 131.200, and if that does not happen, as long as price remain above the structures here, I would continue to look out for buying opportunity. So these are my views on the USDJPY. I hope I made myself clear and I was able to simulate all the possible scenarios that are likely going to be happening on all of these commodities that we looked at for today. And I hope you screenshotted my screen so that you can use it as a reference point when you're about to make your individual decision. Now, the next thing I'll be doing right now, for the sake of those who are not part of the beginning of the session, is to quickly run through and do a quick recap of what we talked about today so that we can be on the same page before I drop the curtain for today. So the first commodity we looked at this morning was the US oil, and I told you I already have a buy position triggered above the $73.90 level. Let me zoom in so that you can see things more clearly. So remember, we identified a channel here between the $73.90 level and the $73.50 area, as you can see here. So I told you I have a buy position triggered above this level, and I hope that price will continue to go to the upside in that regard. However, if price does the opposite and drops below the $73.35 and the $73.35 level, taking me out of my buy position, then we shall be looking out for selling opportunities below the structure. So that is that on the US oil. And then we went on to talk about the US tech as well, where I told you I had a sell position triggered right below the 12,500. And for those who are part of this trading journey, I told you to move your stop loss accordingly to lock in some profit here, as we might likely see some reversal pattern happen to take price in the opposite direction. Now, to guide our trading activities for today, we already identified a bearish trend line here, and for those who had missed out on this sell opportunity we took advantage of right below the 12,500, I have told you that you should remain patient and wait out to see if price will come back and do a retest of either of the structures to add more position. And if you're already in this trade, to add if you're not in this trade, then you could be joining that decline from that level. So as long as price remain below the 12,500, we want to remain very comfortable in our buy position, in our sell position rather. And one thing about this structure is, because we have a channel between the 12,550 and the 12,500, above the 12,550 is an area to look out for buying opportunity at this point. So if it so happens during the New York session today that we get taken out of all the sell positions here, above the 12,550 seems most appropriate to be looking out for buying opportunity. Then there is another thing I made mention here on the US tech, which I would like us to take note of while we continue to monitor price action on the US tech. So that is more clearly seen on the 4 hours time frame. And remember, I told you how we have this bullish trend lines. We have the major one, which is a thick one on your screen, and we have the temporary one, which is a deviation of that bullish trend line here. So the deviation is this one here, and I told you that as soon as price gets into the structure, that trend line, which also shares a beautiful confluence with the 12,350 level, I told you that we should be moving our stop loss to lock in some profit, as we want to see how price action will be reacting to this level to decide if we are going to be adding more position to our sell trade, or we might be getting ready to join a bullish momentum. So if we see buy pressure above this level, it could come in the form of a double bottom structure, a head and shoulder pattern, a falling wedge, whichever case it is. Breakout retest on our lower time frame should welcome a buy position. However, if price action breaks down the 12,350 level, which shares a confluence with that trend line, selling pressure below the structure will be welcoming additional position to our existing sell trade. So that is that on the US tech. Then I went on to talk about let's see the GBPUSD for today. And on the GBPUSD, we have a simple setup that we are going to be using to guide trading activity for today. So I would like to zoom in so that you can see things more clearly here. And this is what we have here on the GBPUSD. So this is how price action has been reacting to this current structure since the beginning of the week, as we already have a channel between the 1.20650 level and the 1.20300 area. So we have the resistance point of the channel here, and we have the support level of this channel around this area. So we continue to wait out for a signal in the form of either a breakout of the channel to give us a buy opportunity, or a breakdown of the channel to give us a selling opportunity on the GBPUSD. And I told you, if a further breakdown of the 1.200 level happens, we want to be adding more position to our existing trade. Ensure you screenshot my screen so that you can use it as a reference point when you are making your decision on the GBPUSD. Then we went on to talk about the XAUUSD, where we also have a beautiful setup here, and I told you I have my position triggered. I already have a sell position triggered on the XAUUSD, and looking forward to see price action break down the 1,860, where we want to be adding more position to our existing trade. And to make things simpler here, I told you that we have two structures here to use to guide our trading activity. The first one is this trend line. After we connected the series of lower highs here, as you can see, price action has continued to respect that trend line. So we hope that that trend line will continue to hold selling pressure, leading to a further breakdown of the 1,860 level, which will be welcoming additional position. However, if price action at any point in time breaks out of the resistance point of the channel at the 1,880 level, which also shares a beautiful confluence with our trend line, we might be looking out for a counter trend opportunity at the site of buying pressure above this level on our lower time frame. And I told you that if price action continues to the upside, we want to be moving our stop loss accordingly, as this is a counter trend opportunity. And as soon as price tests the structures, move your stop loss. If selling pressure resumes below the 1,009, then we get ready to join that decline. But if that does not happen, instead price breaks out of that structure, retest with buy pressure on our lower time frame, we want to be adding more position with the hopes that we shall be seeing selling pressure below this 1,925 level. So we have some key levels here that we shall be using to guide our trading activity if it so happens that we have a breakout of the 1,880 level. And let me show you what I said I saw on the 15 minutes time frame of the XAUUSD, where I said I had my position triggered. And on the 15 minutes time frame, this is what I saw. I saw a beautiful pennant here, and you know, whenever we have a pennant, we want to see price action break down the bullish trend line of that pennant for us to be joining that decline. And in fact, that trend line also shares a beautiful confluence with the 1,875, which I told you was a very good opportunity for me to sell at this point. And I also told you to sell at this area as long as price remain below the 1,875. We want to be comfortable in our sell position on the XAUUSD. Then I went on to close the day with the USDJPY, where the 15 minutes time frame, I told you I was able to identify a setup which allowed me to buy right above the 131.770 level after identifying this reversal pattern around this area here. And for those who had been part of this trade, I told you, well done. Move your stop loss accordingly to lock in some profit, as we want to see how price action will be reacting to the structure here, which is the resistance point for this week at the 132.350 level. So I also said those who had missed out on this opportunity that you shouldn't worry. Let's be patient and wait out for price action to break out, retest the 132.350 level for us to be able to join or add more position to the existing trade that we have here on the USDJPY. And if you're actually thinking of selling the USDJPY, I told you, for me, selling the USDJPY based on this current structure is a no-no for me. As long as price remain above the 131.600 level, I want to remain very bullish at this point. Remember, we have a strong supply zone somewhere around the 131.200 level, which is an area to look out for selling opportunity. If it so happens that price action drops to the downside around this level, even you can use the 131.600 as a selling niche for this. If price drops below the 131.600 and a further breakdown of the 131.200 and the 131.00 level will be a very beautiful opportunity to add more position. But for me at this point, I'm very doubtful that that will happen. So I still hold on to my bullish bias here and hoping that price will further break out of the 132.350 level to welcome additional position on the USDJPY. So on this note, I would like to call it a day here, and it has been a wonderful moment with you guys. I really appreciate every single one of you. I appreciate your attention. Let's see if there are any comments before I just drop the curtain. Okay, Miyagigi, all right, thank you for the compliments. Steamroller, okay, you're welcome. Steamroller, Sergio, you're welcome. CG921, hello. All right, so on this note, I wish you best of luck during the New York session today, and remember, do not get too excited at the sight of a signal when it happens. Scale down to your lower time frame, like your 5 minutes, 3 minutes, even your 1 minute time frame. Look out for retest of structure for you to confirm that price action is actually going in that direction that the breakout has happened. So I wish you best of luck during the New York session today, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review all the pairs we have been monitoring since the beginning of the week, and at the same time get ready for the New York session tomorrow. Do have a wonderful evening. Bye bye.